The tech startup ecosystem is in danger. Silicon Valley Bank has collapsed. Could this be the biggest bank failure since 2008? Let me break it down for you. Silicon Valley Bank, or SVB, is the bank for startups and tech companies. During peak COVID, two major things happened. There was a high demand for tech companies, and the Federal Reserve cut interest rates to basically zero. These two things made investors and VCs really interested in tech companies and startups. This is where SVB comes in. With tons of tech companies getting millions of dollars from investors and VCs, they put their money in Silicon Valley Bank. This made SVB grow like crazy from $60 billion in 2019 to $189 billion in 2022. Now, this is where the downfall hits. SVB made bad investments. SVB invested in mortgage-backed securities and treasury bonds with a fixed interest rate, but this was only good for when interest rates were low. Then comes inflation. Interest rates shot up. Investors stopped giving millions to the tech industry, and companies had less money to put into the bank. SVB also decided to sell some of the securities they owned. This basically ended up scaring people, and companies started pulling out of SVB ASAP. This then leads to a bank run. SVB was closed by regulators, and FDIC took over. Even though only less than 4% of accounts were insured by the FDIC with a max coverage of $250,000, the US government announced they will be covering all accounts and giving back all money to avoid a banking crisis. What does this mean for startups and the tech sector? With banking scares, will the tech sector experience another wave of layoffs?